People have stopped moving to Texas, and the result is that home prices are now going down across the state, with price cuts in cities like San Antonio, Dallas, and Austin starting to get pretty severe. And the ultimate problem in Texas's housing market right now, which is going to be good for you as a home buyer, is that inventory is absolutely surging. With a 40% growth rate in inventory year over year, going from 55,000 homes on the market to 77,000 across the state. That's the third biggest inventory growth in America after Louisiana and Florida. Why is inventory in Texas's housing market surging? Well, less people are moving there, but also the builders went absolutely crazy in the state of Texas over the last 3 years during the pandemic. They pulled a record amount of permits, even more than they did in the peak of the previous bubble in 05, 06, 07. Now those permits for homes and apartments are getting delivered in 2023 and into 2024 as the demand is going down, which is causing pandemonium in a city like Austin. Austin's gotten hit harder than any other city in America by this housing crash so far. Data on Reventure App shows that home prices in Austin are down by over 10% year over year. However, in certain pockets of the city, the prices are down by as much as 20 to 30%, and there's listings on Zillow right now where the values are basically back to pre-pandemic level. For instance, this house on the east side of Austin was worth about $590,000 in the middle of 2022 according to Zillow, and it's now listed for $425,000, a 28% decline in a value that's getting pretty close to what it was back in 2020. Now, I still think a metro like Austin has more price declines to come because it has the perfect trifecta of what you would want to see as a home buyer to see more price declines. It has surging inventory, it has lots of sellers cutting the price, and it also has a big surge in the number of days on the market for the typical listing, with the median DOM jumping from 21 days last year to 45 days this year, and that's likely to go up even more in the future. And so very important that you guys understand this if you're a home buyer or real estate investor. The longer that homes sit on the market, the more desperate that sellers are going to get. But really the big problem for Austin and cities like Dallas and San Antonio and Houston is that there's just fewer people moving in and buying homes right now in the middle of 2023 going into 2024. There was a big surge in people moving to Texas during the pandemic, where you can see in 2022 that 350,000 net people moved into the state. That was the second most in America after Florida, and nearly 3 times North Carolina at number 3. And you can see that that level of migration was also a record high. In a normal year, it's more like 150 to 200,000 people that move into the state of Texas. And while a lot of real estate investors would look at that migration data and say, oh, that's great, so many people are moving into Texas. No, it's actually not great that the migration was so high in 2022, because that was never a sustainable level of migration. That was never going to keep going into the future. And now we're seeing the migration drop off. We don't actually have the data from the census yet on the migration in 2023, but I guarantee you that when we get it, it's going to show a big drop off, because basically what we did during the pandemic is we pulled forward the demand of people who wanted to move to states like Texas. Maybe someone would have moved there in 2024 or 2025. Well, they did it in 2021 or 2022, so they're not going to do it now in 2024. In fact, actually, lots of people are leaving the state of Texas. I lived in Texas for 2 years during the pandemic and I left, and lots of my friends have done the same. In fact, you can see there was a similar jump in migration when in 2006 at the peak of the previous bubble, and then bam, that migration fell back down and Texas had a housing downturn back then, just like they're going through a housing downturn right now. When the census updates this data in 2023 on migration, I guarantee you it's going to show a big drop. And again, the way that I know this is through looking at inventory. If the amount of homes for sale is surging as well as the amount of apartments for rent is surging, then you know there's fewer people moving in, which is going to cause home prices to go down by more. But here's the thing you need to pay attention to if you're a home buyer investor in Texas is the fact that there's actually big differences that exist across the state and how much prices are declining right now. And even there's big differences across a city. For instance, in Dallas, we can see massive differences in home value growth depending on the zip code. So for instance, these areas in red, closer to the center of Dallas, just to the north, they're actually still seeing appreciation, plus 3% year over year, plus 4% year over year. However, if we scroll up north to an area like McKinney, Prosper, or Celina, home values are down 7% year over year on average. And on certain listings like this new construction, we can see the builders had to cut the price from $900,000 in May to $700,000 at the end of July, an over 20% drop in just just 2 months, and it likely has further to go given the very low amount of saves on Zillow. And the trend to pay attention to here is that a lot of the suburban and more rural neighborhoods within a metro like Dallas or Austin or Houston, they're the ones struggling the most right now, because these places that are maybe 30, 40 miles from the downtown area, these are the areas that people fled to during the pandemic because they wanted to get away from population density and because they were working from home. However, now those trends are starting to reverse. More people are getting called back into the office, and more people are wanting to live a life in the city where there's more amenities. And so naturally, that's causing the downturn to happen first in the suburban and rural areas of these metros. And so ultimately, that's good news for you if you're someone who's looking to buy further out in the suburbs, but bad news if you're someone who wants to buy closer to the city. Because in a market like Dallas, it's still very competitive to buy a house in these neighborhoods that are like 5 to 10 miles from the center of the city and where the school districts are good. Which you can see exemplified on this map of the Dallas Metro, which looks at the neighborhoods that are quote unquote the hottest here in orange. You can see basically up from Highland Park all the way to Plano and Frisco. These areas are still hot, meaning that inventory is low, days on the market's going down, and price cuts are still pretty low. Whereas these areas in blue to the southeast and to the northwest and out towards Fort Worth, these are locations where there's lots of inventory, lots of price cuts, and higher days on the market. They're cold. However, it's not all bad news if you're a homeowner in Texas right now who's worried about, seeing your value go down, because there actually has been some good news delivered to you by Governor Abbott, the governor of Texas, over the last month. He just signed a historic piece of legislation that's now significantly lowering property taxes for the vast majority of Texas homeowners. This piece of legislation was just approved by the Texas legislature, and the Texans are actually going to vote to confirm it in November. But really what you need to know is a total of $13 billion in property tax cuts, with about $7 billion of that being sent to Texas school districts so they can lower the taxes they levy on property owners, and another $5 billion being used to double the current homestead exemption to Texans who own and live in their homes as a primary residence. The result of this is that the average Texas homeowner who lives in their home could see a 42% cut in their annual property taxes. Now, your exact savings as a Texas homeowner is going to vary depending on the value of the house and where you're located and if you live in it or not. But that's great news for Texas homeowners. Is likely going to take the sting out of the fact that your home values are likely to decline by more into the future, particularly if you live in a city or metro where inventory has exploded. We talked about that inventory figure in the beginning. Very important that you guys track the number of homes currently on the market in your city, county, and zip code. And we can see that the biggest year-over-year inventory growth in Texas right now is actually coming north of Austin in metros like Celina and Waco, where the inventory has more than doubled year over year. In particular, Waco is now a housing market that's getting hit very, very hard. This is, of course, the city made famous by Chip and Joanna Gaines doing home flips there. Well, it's getting harder and harder for them to do those flips because not only is the inventory way up, the number of days on the market has nearly tripled over the last year, from 23 days to 62 days. Like this 3-bed, 2-bath, 1,300 square feet that's on the market for $207,000 in Waco. This has been on the market for over 500 days on Zillow. They originally listed it for $250,000 in March 2022. They cut the price, then they had a pending sale in January at $225,000. The pending sale fell out, and now it's listed at $207,000, which is actually a cheap enough price that you could buy and own this house with a mortgage at $1,400 a month, which is significantly less than the rental estimate, meaning maybe this is a good buy at this point. Which begs an interesting question for you as a home buyer. Like, say you're in Waco or in Austin or in, northern Dallas up in Celina where the prices are down. Like, when do you say, okay, like now is the time to buy? And ultimately that's a decision you kind of have to make for yourself, determining on your financial and family situation. But I would say what you really want to look for is shifts in the trends in inventory and days on the market. So for instance, if inventory and days on the market is still going up and it's significantly higher than it was last year and even 4 years ago, that's a signal that prices are going to continue to go down. Like in Fredericksburg, if the days on the market is up 134% year over year, and is now at a level that's actually like above what it was in some of these pre-pandemic years, with the inventory also being above what it was before the pandemic, yeah, this is a sign that an area like Fredericksburg is probably going to continue to see price declines over the next 6 to 12 months. Now, in comparison, a metro like Houston looks a little different. I mean, in Houston, the inventory levels are still pretty low, and there really aren't that many sellers cutting the price. For instance, if we change the data point on Reventure App to price cut share, looking at the percentage of sellers who reduce the price in a given month, we can see in the Houston metro that price cut share is only 22% in comparison to 46% in Austin and 30% in San Antonio. Moreover, this 21% price cut share in Houston is significantly below the 37% that existed before the pandemic, suggesting that while home values in Houston have gone down a bit and might continue to go down a bit, we're not going to see a big crash, at least not yet. But one thing I really need to stress to you guys out there, whether you're a regular home buyer or an investor, is that it's not enough for you to simply understand this data at your state or metro level. You got to dig deep and see what's going on in your zip code and in your neighborhood, because in an area like Houston, there's just huge differences depending on where you are. And you can get a sense of this by looking at inventory growth. If we zoom in here on Houston, we can see inventory is actually going down in some of these zip codes directly to the west and southwest of the urban area in Houston. These are some very high income neighborhoods in places like Bel Air, where the inventory is down 25% year over year and is way below what it was before the pandemic, literally 70% below on inventory in this 77401 zip code. And so this zip code, unlikely to see big price declines in the next 6 months. However, if we just scroll north a little bit to a zip code like 77022, inventory is up 128% year over year and is now literally at its highest level on record according to data from Realtor.com. Well, yeah, prices are likely to go down over the next 6 to 12 months due to this big surge in inventory. And these big differences in local housing markets exist everywhere across America. And this is a fascinating thing to understand about the initial stages of this housing downturn in 2023. It's a bifurcated housing market downturn. Certain neighborhoods are feeling it and feeling it hard, whereas other neighborhoods are not feeling it. And so if you're someone who wants to understand whether it's a good time to buy in your neighborhood, know that you're not going to really get a full perspective by hearing a YouTuber like me talk about America's housing market or your city's housing market. You have to do the research for yourself and access the data for yourself on your neighborhood to get a better indication of what's going to happen over the next 6 to 12 months in terms of prices. And the best way that you can do that is to actually go and use Reventure App. This is the tool that I developed and have used in this video that allows home buyers and investors to get insight into their housing market. You can look at inventory, you can look at price cuts, you can look at how much prices have gone up or down the last year. You can even see data on how many mortgages exist in your zip code. And Reventure App is free for a limited time. It's only going to be free for about the next month to month and a half. So go to www.reventure.app and use it and create an account right now if you haven't already, because time's running out to use it for free. And lastly, before signing off, I just want to leave you guys with some predictions on Texas's housing market. How much do I think home prices are going to go down across the state, and how long will it take to achieve those declines? Well, to answer that question, I want to start by looking at how overvalued Texas's housing market is in terms of home prices relative to the economic fundamentals. We go here on Reventure App and change the data point to undervalued percentage. You can see Texas as a whole is about 25% overvalued. The typical home price across the state's around $304,000. The fair home value based on underlying incomes is $226,000. This is a level of overvaluation that we have never before seen in Texas's housing market history. You can see even going back to 05-06 at the beginning of the last downturn, Texas's housing market was actually undervalued back then, which is why it didn't really collapse by too much. Now, the way that over-undervaluation is calculated on Reventure App is I take the typical home value over the last 20 years and compare it to the median household income over the last 20 years and figure out what the average value to income ratio is. And in the case of Texas, that average is 3.1 over the last 2 decades. So on average, over the last 2 decades, houses traded for 3.1 times the median income in the state. However, today, they're trading for 4.2 times the median income in the state, which indicates overvaluation and likelihood of price declines, especially with inventory and price cuts surging. Now, that overvaluation can be corrected in 2 different ways. One is for home prices to go down. The other is for incomes to go up. And it's likely that some combination of both of those will happen in Texas's housing market over the next several years. I could see, for instance, prices going down on average by 15 to 20%, with incomes increasing by 5 5 to 10% over 3 to 4 years. If that were to happen, Texas's housing market would then become fairly valued in 3 to 4 years' time, maybe by 2026 or 2027. So if you're a home buyer or an investor in Texas housing market today, it is very reasonable to expect the prices will continue to go down due to this level of overvaluation, especially in cities where the inventory has gone up, the price cuts have gone up, and the days on the market has surged. And once again, go to Reventure App, www.reventure.app, to track all of those data points for your city, county, and zip code. They're free for a limited time.